Hello and welcome to the look ahead for Thursday, the 11th of September with me, Fiona Cincotta, Senior Market Analyst at City Index. So two major events due tomorrow. We've got the ECB interest rate decision and we also have US CPI inflation. That does mean that Euro US dollar is going to be under the spotlight. So just as far as the ECB is concerned, they're expected to leave interest rates on hold at 2%. It's expected to be pretty unanimous. This will be the second straight meeting that rates are being left unchanged. And I think there is also a growing consensus that the ECB may be at the end of its rate cutting cycle. So that's something that investors are going to be watching out for to see whether there are any hints or comments which suggest that the pause will be extended further. I mean, if we have a look about the position and the data that we've seen from the Eurozone recently, we know that inflation is holding steady around that 2% level. It was just at 2.1% annually, so pretty much on target at the ECB's 2% target level. The area of concern would be growth. Now, we also know that GDP was pretty stagnant in Q2 at 0.1% quarter on quarter. Now, as far as ECB projections are for growth in the second half, we'd need to see growth around 0.7%, 1.2% across the second half of the year, which may be a little bit optimistic. And that's the level of growth that we'd need to see in order to assure that, that inflation doesn't undershoot target. So that's the area that we might see a little bit of concern as far as ECB policymakers are concerned. And if we do see that sort of mentioned, any concerns over the growth outlook, then that could be a dovish signal for the markets, and it could mean that the ECB will be looking to cut rates again. However, if we see them adopt a more wait and see approach, that could be considered supportive for the euro. Obviously, this meeting comes as we've had that EU-US trade deal agreed. The ECB does have the luxury, given that inflation is on target, of actually waiting to see how that does impact the Eurozone economy. So this is just having a quick look here. This is what we've seen so far as interest rates are concerned for the ECB. They are moving towards that. Well, they are at that 2% level, which is obviously somewhere close to where they consider to be neutral. Now, the other one that we have to be looking out for tomorrow is US CPI. So this is US inflation, consumer inflation, which is expected to rise to 2.9% up from 2.7% annually. Now, interestingly, we had PPI inflation data today, which was weaker than expected. It actually fell on a monthly basis by 0.1%, which comes after, in August, and that comes after a stronger than expected PPI in July. So there is some choppiness in the results that we're seeing, but the data does actually add to evidence that the Federal Reserve will be cutting rates in September. We've obviously had that weak jobs data last Friday, the non-farm payroll. We had that big revision to the payrolls through to March 2025 for the year, down 111,000. So significantly weaker jobs creation across the year than initially expected. So that's added to Federal Reserve rate cut expectations. Now we've seen that PPI data not as hot as expected, again reading into that, adding to that Fed rate cut. The market's currently pricing in around 66 basis points worth of cuts across the year. If we get a cooler than expected CPI reading, then that could really see outsized rate cut bets for the September meeting rise. So currently the market's pricing in just around 90% probability of a 25% basis point cut in the meeting next week, and then the remainder of that is pricing in a 50 basis point rate cut next week. So we could see that expectation rise if we get weaker than expected CPI data. Now this is Euro US dollar that we're looking at here. We can see we've attempted to break out of this falling, sorry, just bear with me one moment, that just attempted to break out of this falling trend line just moving above it, but we're still struggling around that 117. This is the 117 level that's proving to be a really key now support level. It was quite a key resistance level over the past few weeks. If we can get it, need to keep a close above that in order to bring that 118.30 level back into focus. If we have that weaker CPI, and if we see the ECB hold their ground as far as rate cuts are concerned, and consider that they will continue waiting and seeing what happens. On the downside, if we get a close below 117, if we get a move below 117, then that does bring that 115.90 level back into focus, 115.80, which was the low that we saw back in late August. Other area that we're just going to be looking out for as far as the US data is concerned is the S&P 500. Again, reacting to today's data, we've seen it push higher. It did actually reach a fresh record high today of 24,010. Have just come slightly off that. I mean, we're seeing this price grind higher very slowly. But, you know, if we do see a weaker than expected CPI print and a dovish, sort of more dovish tilt from the Fed next week, then that could really propel US stocks higher quite considerably. If we get a stronger than expected CPI print, that does complicate the situation for the Federal Reserve, as it raises questions over stagflationary, where we're seeing that weak jobs data but sticky inflation, which is quite a difficult situation for the Fed to handle, as that requires two different policy decisions in order to address each of those problems. So for the time being, this is the Nasdaq next level on the upside, 24,500. We've got blue skies above. On the downside, we're seeing support here at that 23,500. That's the 20 SMA and the falling trend line support. So I hope you like what you've seen today, and if you do, then please do give this video a like, and for more videos like this, then please do subscribe.